All right. Sorry about that, guys. We'll get going again. Apparently, it wasn't as working. I think we're just having some technical difficulties here locally. All right, we're going to get going. U.S. stocks obviously traded pretty well last night. Finished the session really strongly, as you can see there. Pretty much all the sectors were up except for some of the defensives like telecoms. And really just kind of driven on a little bit of nothing. We are going into earnings season, and last night was the first day of that, led by Alcoa, which had earnings just after the bell. If I'm not mistaken, Alcoa beat on, well, I'll show it to you in a second, I believe. But long story short, they beat on the earnings per share number, but they missed on the revenue number. So, but I think it generally was taken as reasonably positive, and you saw in Asia, reasonable trading in commodity and mining stocks overnight. Yeah, and we also saw some Chinese inflation numbers out of China, which have eased off of a 10-month high, and I think that's also come as a big relief there. Obviously, big worries there going forward, and you've seen that in the commodity prices, and you've seen that in the local property shares in China. As well as some of the lending companies. So it's good to see the inflation starting to back off there in Asia. And to be honest, that's really the thing that we probably need to focus on the most in terms of where we're going to be heading there. You can see there Alcoa's numbers. We had 11 cents versus 8 cents expected on earnings per share, but we missed on revenue by just a bit. So generally, I think broadly it was, you probably look at it as in line to maybe a small beat. So I think that, from what they were expecting, it's probably a reasonable result considering. So maybe we'll get a little bit of a spillover of positiveness from the Asian session in resources into our local resources today, which would be I think a warm welcome to some of the people that have been sitting on that and just getting their faces ripped off for the last couple months. There you can see the CPI number out of China, 2.1 versus 2.5. That's actually quite a nice, I think a warm welcome number. We have also later we've got industrial production out of the UK. We've got manufacturing production. Locally we've got some consumer confidence, and then we've got wholesale inventories out of the States later. So very, very little data out today. Won't be moving markets, in my mind. So I think the job's going to be to focus elsewhere. All right, let's jump into the maps. Okay, first thing we're going to look at here is U.S. dollar rand. We look back at a 5-year here just to kind of show the trend that we've had. We've had a nice rally over the last little while, and you can see on the chart here the real reversal that we've made off of about 933, 935, somewhere in that neighborhood, and we've pushed below 9 as of this morning and yesterday evening. And we know we've talked about this several times. Really critical level here has been 880. You can see how we've we couldn't break through here middle to end of last year. We managed to just push through it, and we broke back below it. Then as we broke through it again early this year, we came down and tested it several times, kind of repeatedly, and then finally broke down from those levels. So 880 is really definitely our line in the sand. It also matches up nicely to trendline support for the dollar or resistance for the rand here. So I think this is a trade that we could be looking for in the next few days. If we do see the rand get down to 880, might be a nice little play off of that level in the short term. Okay, let's look at Able now. Able is really, really struggling, major underperformer as of late. You can see here we are right on the verge of breaking down. We literally closed right at support yesterday, and when we've put in 5, 6, 7 red bars in a row, something along those lines, And it's really looking not ominous here for Able. I think if we do get a break below this level, in my mind, we'd be looking at a target that would be almost 3 Rand lower than this. So, from the top of this recent peak, which is up just a touch north of 31, down to where we'll break down from potentially, which is just above 28. So we're looking at potentially for $3 a downside here, and Able if we get a breakdown here. So watch this one closely. I know that there is quite a lot of short exposure here, but there's a hell of a lot of malaria in the share lately. It just hasn't traded well, and I think it's better to follow the trade action rather than sit here and try to buy something you may think is cheap. All right, Azor. This is the famous Acapulco cliff dive that we're witnessing here. I just want to kind of go back while I'm talking about this and actually look at why does that look so funny? Sorry, I'm looking at the wrong stock. I wanted to show you just Anglos and see that move down in Anglos. And it looks, sorry, if I jump into a 1 year here, this is if you were to shrink this chart, because that was a 10-year chart that we're looking at, this fall would look almost identical to the sort of fall that we saw in Anglos. And what we really need to do here is we need to back it up a little bit, because Anglos really only bounced once it got to long-term support, which is, or from where it really broke up from, which is way down here close to 234 Rand. We're up around 270 right now, so for you guys that are just dying to try to catch a dead cat bounce, there is a little support here at 270. You can see this is really where we broke out from. We tested it twice, and then we broke out on the third time above 270. We ran quite hard, well over 300, and then we came back and tested 270. So this is a somewhat significant level. If it trades below here, we're definitely looking at $235, which is right around here. But I think this is something that we need to actually monitor. At the end of this, there will be some opportunities, but let's not try to necessarily catch the falling grand piano here. All right, Investec. I want to show Investec as well. I'll shorten it up to a year just to look at it a little bit more cleanly. But really, what I want to show here is just kind of the breakdown from the top of this pattern, where we really broke below, which was right here around 64. 64, I think it's more closer to 65, in fact, 64 and a half. And we're starting to, in terms of a target, we're starting to get very close to what our projected downside would be, and probably a nice little opportunity to start to nibble here pretty soon. So it's just something to keep on your radar. Our target is going to be from the top of the pattern to the breakdown. We're going to look for that same size move to the downside. So I would say that we're getting very close right now. And like I said, if you're interested in picking up some of these banks at the moment, that might not be a bad one to look at. All right, Harmony I wanted to show as well. I was having a chat with a guy yesterday about Harmony, and makes a very good point that Harmony is very much in the same situation as a company like a Siboney, yet they're trading on kind of 4 times the valuation that a Siboney is, and so I think that this is really interesting. It's an interesting play on the short side if we get a nice break below. Not just because of what he was saying, but I mean technically here, if we break 54, I think you got to be on the short side of Harmony here, and you can see same sort of thing. Our target's going to be from up here where the breakdown was, which is significantly lower than this. So we'd be looking at maybe $48 as a target if we break through 54 today on Harmony. We closed at around 53.90 in the States, so I think a possible break below those levels is actually quite likely. So watch Harmony closely. Might be the preferred to be short on the gold market. And then we're going to jump into a couple international listings. The first one we're going to look at here is Fidelity, which is coming up to test. It's like all these insurers obviously trading well globally. And we really broke out on yesterday's session. You can see on the wick there, but we kind of closed right at a trend line resistance, but I think one to really keep a close eye on. Nevertheless, I mean, if this does punch through, there's significant upside here. So watch this level today. If we trade anywhere in the green today, I think we can start to maybe pick that up. And then the last one I want to show is Cisco. Cisco kind of made a fake break 2 days ago. below 20.5. You can see here we actually opened up, big gap down, but we opened up and we traded up to close above 20.5. Yesterday we also just narrowly held it. So this is, because of this gap down and the fact that we were able to hold the level on a closing basis, I kind of look at it as being a positive. But I think it's an important level to watch nonetheless. So if you see that we are holding nicely on Cisco at 20.5, maybe it's worth a long. But if we break down here, it's also probably could be worth a short. So nice little inflection point to keep an eye on Cisco. And that's it for today, guys. Thanks a lot.